Department stores as redevelopment sites should be good opportunities for investments. And as brands move out of department stores, they are looking to lease freestanding locations. Mixed-use developments are investment opportunities where residential, office, and retail services can support each other, especially outdoor mixed-use developments. Mixed use also provides real estate class risk diversification to both developers and investors. There will also be opportunities in suburban real estate growth as people continue to work from home and want to shop local. And further development of fulfillment centers and local supply chain warehouses are real estate investment opportunities. There is also opportunity for the potential of expanded immigration policies. Notably, Canada's ties to Hong Kong with the 300,000 Canadian passport holders currently residing in Hong Kong. Many view Vancouver as a possible safe haven against the backdrop of the ongoing political crisis there. There is a distinct possibility of a new immigration surge of Hong Kong citizens moving to Vancouver, with its strong Chinese resident representing about 20% of our population.
For sure, we certainly hope so. Going into the COVID crisis, we were relatively quiet on our pace of investment the last couple of years, but we're expecting now to see the spread between bid and the ask narrow, which should bode well for transactions. Particularly land values are typically the first to see that in. I still think that development risk is not well priced into real estate right now. It's just getting harder and harder generally to do development. So I do think there's a bit of a misalignment there in terms of development risk. I think with respect to development, I think the development community needs to do a better job of explaining to the general public the benefits that come from the investments that we make, the jobs and the community amenities, and the large sums of money that are going into government to fund many of the things that we need for the public good. As far as the food groups go, industrial and resi are really continuation bets for us. It was something that we've been very focused on as a company and as business strategy for many years, and we'll continue with that, and our conviction continues there. In terms of deal types and structures, we're doing more joint ventures now than ever before, and our platform is at a maturity level where we have the expertise and the experience to deliver to partners, and we have the right type of collaborative culture to do that.
Investment and development opportunities are still hard to find. We've been bidding on properties throughout COVID and have been in multiple bid situations. We're focused primarily in downtown Vancouver and the west side and the east side of Vancouver, in the center of the region, and there's still very strong appetite. Seen a very small amount of distressed transactions, and we may see some more of those in terms of development land from undercapitalized developers who are getting hit hard by the delays caused by COVID and can't go the distance. Really have not seen a lot of that yet. So I expect things to remain pretty competitive, and particularly for tier one property, I think we're going to remain competitive, and we're not going to see a lot of distressed property available.